What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting method and the trading method that we use can be implemented with any company that's publicly traded in the U.S. stock market. So make sure you hit that like button. If you haven't already, make sure you hit that subscribe and notification buttons as well. That way you're alerted to when we release new videos. Thanks to all those who continue to tune in. Really helps the channel grow. And welcome to those who are new to the channel. The nightly and weekend videos, like tonight's video, focus on identifying triggers and targets for trades ranging from scalps and intraday short-term trades all the way up to long-term swings or leap trades is what a lot of people call them. If you want a deeper dive into exactly how we set the charts up to get our broadening formations, levels of support, resistance, things of that nature, make sure you check out the bonus content on our YouTube page where we dive a little bit deeper into that for you. And if you're not familiar with the STRAT, which is the base of our charting and trading method, make sure you check out the link in the description of this video where you can get this free quick reference PDF guide, download it, and get start on understanding the strat. It's probably one of the easiest ways to read price action, and there's a huge strat community out there, so there's a lot of information out there on the internet if you want to dive deeper. But yeah, with that, let's go ahead and jump into the agenda for today. I encourage you to watch the full video. We do go over all time frames, so go ahead and stay tuned for the whole thing. But we'll go ahead and start off with a recap of the price action from today, Thursday, April 23rd. Before we zoom out, take a look at the week, month, quarter, and year price action. Then we'll take a look at the market maker's expected move for tomorrow, Friday, April 24th. And we will zoom back in to set what we call the 4-hour markers and then the triggers and targets for, this says Thursday, April 23rd. This should be Friday, April 24th. There we go. We'll do a quick review of the triggers and targets for the week, month, quarter, and year as well. We're pretty extended out here, but we've got some extended targets for you. So let's go ahead and take a look at the chart, starting with the 5-minute like we always do. This is how we take advantage of the proven and repeatable strategy that we talked about, especially for early morning scalps or early entries into longer day trades. Excuse me, I'm still battling this cold a little bit, but I'm almost over it. So excuse the pauses here. But anyways, to capitalize on that proven and repeatable strategy, again, for early morning scalps, early entries into longer day trades, and that strategy is identifying first what we call our 4-hour markers, which are the previous high a day, previous low a day, overnight high, and overnight low, and then mapping out or charting where the opening price for the day is, or the opening trade is for the day, and using those as your guide rails, right? So once you get the opening print, if you get higher lows at or above opening print, then you want to look to get into calls targeting overnight high and previous high a day. Now, if we get lower highs at or below the opening print, then you want to look to get into puts targeting overnight low and previous low a day. So today you can see here we gapped up, right? So automatically, even if we get a higher low at or above opening print, previous high a day is off the table as a target, leaving only overnight high. And as you can see, we opened basically, well, not right at opening overnight high, but right up under overnight high, and quickly pushed above it, right? So automatically those two targets are out the window. And now you've got to just rely on, whatever your trading system is, whether you're looking at higher lows, lower highs, strat reversals, whatever your strategy is, we're outside the those guardrails of the proven and repeatable strategy. So unfortunately, that was kind of taken off of the board, but if you properly measure your risk to reward, positioning, size of your trade, then you can still get an advantageous trade early on in the morning, right? So you can see we pushed up, got this higher low. As soon as we went 2 up, locking this 2 down and as a higher low, we went ahead and entered calls. We've got a higher low above opening print. Yes, we're above overnight high and previous high a day, but we're using that just as a trigger, right? Because it's just more of an indicator that there's bullish action in the market at that time, right? So we did get a lower high, but we got the higher low. And just part of our strategy is, once we're this far extended, right? This run over the past 3 weeks has been pretty crazy, right? We've barely got any, pullbacks even on the 4-hour, right? I think we've got a couple of 3-hour candles, but not even a 2 down on the 4-hour chart. So, we're this extended. It can be a little tough, right? Buying at the highs. And since we are buying at the highs, all-time highs, actually, we want to have a little bit of a shorter trigger or a quicker trigger on taking profits, right? Or even capping any, or stopping any losses, right? If the trade goes against you, I think it should be known that you want to cut losers quick, but maybe be even extra quick with this because there's so much thin structure below that the pullback can be pretty crazy. So all we're looking for is if we're going to make a lower low, right? So we didn't make the lower low here, stayed in the trade, higher high, higher low, pushed up, made a higher high, soft higher low, higher high. Now we're coming back down. Okay, we broke this this soft higher low. We went ahead and exited our position there, right? Thought about leaving a couple runners just because momentum. But if we take a look at the internals for the QQQ, this was the first day we've seen a change, right? Oops, come on. Give me the, why can I not pull this? Hello. Okay. Market internals are not, the chart is not working with me here, but you can see up here in the upper right hand part. Okay, now it wants to try and work. Okay, we'll just stop with this. You can see we've got the tick up here, and it was below zero line from the beginning of the day and actually went into trend lower zone. Did try and test the zero line again, but continued to fall below and even test trend lower zone in the morning, right? Vol QD, money going in versus money going out, opened at the zero line and just stayed under zero line and then finally fell through the middle of the day. 80 QD market breadth opened underneath the zero line and went almost directly to trend lower zone at the beginning of the morning too. So none of these internals are indicators that we want to stay in these calls longer than we need to. So we went ahead and cut the whole position. We waited to see what might happen. And I think we got, what was this? Yeah, this was let's switch to the 15-minute real quick. There we go. We got the higher low on the 15 here. We did go ahead and grab another couple of calls just to see, are we going to continue to push up? We're hitting this 200 fib extension. And this is the bull flag from April low to the November high, to November low. The bull flag on the weekly chart. Now we're getting into the fib extensions for that. We're past the April low, April to July bull flag on the daily. Now we're onto this weekly extension, and we're pretty extended. We're hitting this weekly broadening formation here as well. Here's a daily broadening formation coming through. We've got a couple of more, resistance fib extensions above as well. So we knew we'd probably it would be higher risk here. We're buying at the top once again, but this market has been pretty crazy. So, let's just see what we've got. Even though internals are not the best, we'll see if that's just early morning and people want to go ahead and buy this little bit of dip that we got, just like they did here. Could have been, but we entered. We pushed up, made a higher high, but again, we kept this low as our exit point. And, you see we hit that cliff, fell off, went ahead and stopped out, had a small loss on that particular trade. So still ended up net positive on the day, but not as well as we could have, at least on the day trades. We've still got some 28s left. We rolled some of our, we had some 50s, $50 calls for January 2027 that we bought back in June that were up, like 2,600%. Yeah, 2,600% on one, 3,000% on another. So we went ahead and rolled those to 28s and took some cash. So we don't have, or we think we have I think we have 2 or 3 2027s left. The rest are all 28s at this point, and even those aren't, we don't have a ton of them because when we did grab those early ones, those are already up over 500%, and we're just trying to manage the extended push that we've been on, right? There's got to be a pullback at some point. That doesn't mean we're going to retrace the whole move. That's not what we're saying, but there's going to be some pullback at some point, and that'll be a better chance to really add with more confidence, right? But yeah, so not a whole lot for us to do today. If anybody did get grab puts on that drop, more power to you. I'm glad that you got those. But the rest of the day just went sideways, and we just kind of stayed out of it at that point. We wanted to see how things were going to line up going into tomorrow, right? We had Intel earnings right after the close today. They smashed it. So, we're up $5 in after hours already. So 117. That's like blowing out some of the targets that we had already on there. So, all right, we'll get into that here in a second. But yeah, today, consolidation at the highs, nothing bearish. Didn't even get a 2 down on the 4 hour. Actually, did we? Let me just go back to this 4 hour real quick, because I think we did on the 4 hour finally. Or am I? Yeah, we did get the 2 up, but it was a failed 2 down. Yeah, so today on the day we did get the 2 down, but it was a failed 2 down, so it's a green hammer. There's nothing that we can say that's bearish here, right? If we go to the day, get a cleaner chart here. There we go. Actually, we could get even a little cleaner chart here. Let's just go with the wide. There we go, right? So look at this move. On the daily, we have a soft low with this green 3, but not a 2 down in sight. Come on. Right? From 45 to 115. Not a whole lot to say, right? Weak. I don't even know why we're showing these. There's not much to look at other than the fact that we might actually press these higher monthly and quarterly broadening formations up here at the $140 to $150 area. So, we'll see what happens. We've got earnings that are still, due to come up. Yeah, nothing bearish to really say here. So I'll quit trying to come up with something to say, and let's go ahead and get into the charts and, market makers expected move for the week and things of that nature. Here we go. So, market makers expected move. For that, let's go ahead and bring up our options chain, right? So if you're using Thinkorswim, this is Thinkorswim. If you pull up the options chain, you look at this week, you go over here to the right, there's a number in parentheses. This week or tonight, it's plus or minus $5.97, we'll say. That is the market maker's expected move. So they expect price to move plus or minus $5.97 from the close on Thursday, which, it's already done it, essentially, almost. So we're already basically at market maker's expected move almost. But that is how you get that expected move. If you don't have Thinkorswim, or if the trading platform that you use does not give you the market maker's expected move, you can use the take the at the money straddle, add the premiums of the at the money straddle to the in the money strangle, and then divide that number by 2, and that will give you the same number, right? So market maker's expected move is $5.97. So if we look at our notes here real quick, right? So this Friday, April 24th, 174 trading days left. 112.77 was the close on Thursday. And we can see the market maker's expected move here, plus or minus $5.97, giving us an expected range of 118.74 to 106.80. All right. So if we go back to the charts here real quick, and we'll just look at how we chart that out, right? So orange lines or indicators are for the day time frame. So we can see we've got the market maker's expected move high up here, the low down here. What that would tell us is if we span the whole range, we would get a 3 on the day, or an engulfing candle on the day. But it's, it's very close. The market maker's expected move low is very close to previous low a day. So it would lend itself to more to going 2 up. But like I said, it can go 2 down, or it can go a 3, right? This isn't always the case. Just look at last week. It just only looked like we were going to get a 2 up, and there wasn't really a chance of a engulfing candle. So this does come into play. Quite a decently large range. And yeah, that's what we've got for the market makers expected move. 106.80 is the low, 118.74 is the high. One thing to keep in mind with the market makers expected move, it is right about 70% of the time. So there's that 30% of the time where we can go beyond whatever the market makers expect, right? So just keep that in mind. Just turning to the charts now to look at, we'll start out with the proven and repeatable strategy once again, and how we will attack the day and start to move up the time frames from there. So just looking at the charts, right? We've got our 4 hour markers. Let's get these a little bit bigger here for those on phone. Right, so 4 hour markers are previous high day, overnight high. Obviously that's got to get changed. Activate. That was up to 117, somewhere around there, right? So we got overnight high, previous high day, overnight low, and previous low day. Those are our guardrails, right? Then the next thing that we look for is the opening print. So let's say we get a little bit of a pullback before open, and we open somewhere between overnight low and overnight high, right? Here's our opening print. If we open and we push up, maybe get a little rejection here, pull back, but we get an higher low at or above the opening print, we want to look to get into calls targeting previous high day and overnight high. Should we open here and push down, maybe we get a little bit of bounce, but then ultimately get a lower high at or below opening print, then we want to look to get into puts targeting overnight low and previous low day. Remember, below previous low day is a little bit of a gap left from today, so that could act as a magnet as well, right? Just keep that in mind. But as we mentioned just a minute ago, market makers expected move high, honorable mention here, 118.74, low 106.80, right? So keep that in mind. If we look at the 4 hour time frame, and for more of a day trade, or even possibly an overnight swing, maybe not an overnight swing, just because it is going to be the weekend, right? And a lot can happen over the weekend. You may not want to hold risk that long. If we look at the 4 hour time frame, we triggered this 2 up, 2 down today. But it did not reach strat completion, right? The 2 up, 2 down, it triggers at the low of the 2 up, and it completes at the low of the candle to the left of the 2 up. So that would be down here at the 103.44 level, right? So tomorrow, if we get continuation to the downside, then that gives us this 2 up, combo 2 down, which again would reach magnitude down here at this 103.44 level. If we get some crazy catalyst, or we get really momentum going to the downside, people taking profits from this huge push, whatever, and we reach the strat completion and continue to go down, then we've got a combo 2 up, combo 2 down, and that magnitude is down here at this low here at 99.60. So don't think that we would pull back much further than that tomorrow, but you never know. We've seen bigger rug pulls before, so the week's opening print was 95.97. I would look to SOXL to hold that if we do get some type of big drop. So we'll see. That would keep full time frame continuity, so that the week, month, quarter, and year are all red, right? Looking at the to the upside, right? If we do go to the upside in that first 4 hour candle, we get a 2 down, 2 up reversal, entering at the high of the 2 down, exiting at the high of the 2 up, right? Market makers expected move high is just a little bit above that, so you could always leave some runners, see if we hit that, and maybe go through that as well. Note that we are pushed up against this weekly broadening formation, this diagonal purple line that we've got here. That is a weekly broadening formation, so that would act as a little bit of resistance as well. Quickly switching to the 1 day chart, right, we got a 2 up with a little bit of a wick on top. I'm not going to say that's an inverted hammer, because it's definitely not. Oh, what's going on here? Come on. Not totally an inverted hammer, but you can see the wick on top is about as big as the body below. So not the most bullish thing in the world. I would say more neutral, bullish leaning, but it's not bearish by any means, right? So we'll see what happens if we go 2 down on the day tomorrow. Right, we get that 2 up, 2 down reversal, entering at the low of the 2 up from Thursday, exiting at the low of the 2 up from Wednesday, right? And that's that 99.60 level again, right? Not too far below that is that 95.97. So if we do get a pullback, I would look for price to probably stop somewhere around here if it's not going to bounce, right? Just move sideways, right? The week, we're 2 up on the week. There's not much to say about that. The week and above, there's no real strats to be had. So let's just take a look here at the notes so that we've got the hard numbers here in front of us. Again, from a scalping perspective, we're just looking for higher lows at or above opening print to get into calls, targeting overnight high and previous high day. Or we're looking for lower highs at or below opening print to get into puts, targeting previous low day and overnight low. On the 4 hour, we just talked about, if we go to the downside, we get a 2 up combo 2 down, triggering at 107.46. Magnitude is all the way down at 103.44. We're in this crazy uptrend, so not sure we would actually make it there. Got a couple of intermediate targets here for you, including that 106.09, which is the gap close, right? If we go to the upside, we get the 2 down, 2 up reversal. Crazy to say it's a reversal when we're at this high in the trend, right? Or in the sequence. But yeah, it would be a 2 down, 2 up. And that would trigger at 113.02. Magnitude of that move is 116.77. I don't think that we would have any problem making it there, but if for some reason, overnight news, anything released before open, whatever causes us to stutter, I do have an intermediate target here at 114.78. But should we reach magnitude on that move and continue on, we've got 118.12 as an extended target, as well as 118.74, which is the market maker's expected move. That's it for the 4 hour. From the day time frame, if we go to the downside, we've got a 2 up, 2 down, triggering at 107.46. Magnitude again down here at 99.60. So pretty big in the face of this uptrend that we've got. So we've got some intermediate targets out here where we expect price to either bounce or at least go sideways into the close, right? But if we do go to the upside, we've got this 2 up, 2 up continuation triggering at 106.09. And here are your extended targets. Whoa. Did something not get copied over? Yeah, something didn't get copied over here. Or must not have got saved. So let's just go here from the day, right? If we go 2 up, 2 down, right? Did we have that on the? Yeah, we got the 2 up, 2 down, right? So if we go 2 up, 2 up, right? Let's just do this together. I'll do the exercise with you all. If we go 2 up, that triggers at 116.77. And we've got our first target of 118.74, which is the market maker's expected move. All right, we'll put that there. There we go. All right. Where do we got? What was I just doing? Okay, 2 up, 2 up. I apologize for the continuation. 118.74, 119.48, 48. If you don't know what that number is, that is whoop. What's going on here, guys? There we go. Right, so we've got this 119.48, which is the 178.6 fib extension of that 2024 high to the 2024 low, right? And then finally, we've got this 250 fib extension here of the February 26 high to the April 26 low. So that's like the I guess upper half of the range, the larger range that we'll say. I'll show it to you. We got the chart right here, right? Come on, Thinkorswim. There we go. I'm sorry, not the upper half, but the full range of January's price action, essentially, right? So this February high all the way down here to this April low, that is the full range of January's price action before the breakout, right? So definitely a set of levels that we want to keep track of. So 119.48 and 121.62. Where's our notes? There we go. 121.62. All right, there we go. So sorry for the unsmooth transition there from 4 hour to day, but we went over the 4 hour and we went over the downside for the day. But on the upside, just so we can see the hard numbers here, if we go 2 up continuation, that triggers at 116.77. We've got the initial target of 118.74, which is that market maker's expected move, and then we've got our extended targets here that we just pointed out as well, right? On the week, we've already gone 2 up, 2 up, hit a lot of our targets. Got the 116.06 out here. Guess we should probably have that 118.74 as well. But again, we're up here at the highs, so it gets a little tougher. And then 119.48 is going to be the next target. Looks like because of the after hours price action, we'll go ahead and add the 121 on as well. Just because, oops, we may open up at 119 for all we know. But yeah, those are your extended targets for the week. Again, already gone 2 up, 2 up. Month, we talked about this before. March was a higher low. We went 2 down, 2 up on the month. Ran the STRAT already to completion. The quarter was just an extension of the 2 up, 2 up, and then the year was a 2 down, 2 up. We triggered that and already ran the STRAT on that one as well. So no real targets here. From a STRAT reversal perspective or anything like that, we're at all-time highs. So yeah, we just kind of have to find the targets the best way that we can, and that's what we put out here for you. So I hope it does help some people out there just wondering, you know, what could be the next stop to the upside if we are going to continue to the upside, and you know, where may we bounce if we drop, right? Those are the two questions, right? So we just hope that this video helped out with that. You know, tried not to take up too much of your time, but jammed in as much information as possible. So we do hope you enjoyed this video. If you did enjoy the video and you made it this far, you know, a thumbs up goes a long way, right? It really helps the channel grow. We're just trying to grow, you know, build a big community of like-minded folks, right? Just trying to get a little bit of that money in the market that's out there, that, you know, the big guys are moving the markets in the way that they want to and making the money they want to. But if we can, you know, kind of use a little bit of a strategy and proven methods to, you know, jump in there and get a little bit of it for ourselves, that's what we want to do. So we just want to provide some free information. We don't charge anything for this channel, you know, no membership fees or anything like that. So if you want to go ahead and, you know, give it a share, that goes a long way too. But if you don't have anybody that you want to share it with, you know, thumbs up goes a long way for us. It really helps us grow, and we just look forward to continue to putting these videos out for you. We hope that people have been able to make a good chunk of money this year. You know, especially if you started watching last year, you know, from the beginning. You know, we've tracked this move all the way from the lows in April. So you know, it's on video. It's shown out there that, you know, we've been doing this for some time and putting the exact targets out there from the downside and upside perspective. You know, we did have that pullback, you know, at the end of last year and the beginning of 2025 actually too, that gave us that low in April that we could capitalize on for this huge move that we've had. So I think our videos speak for themselves, and the numbers and everything speak for themselves. So yeah, just appreciate you joining us, and we enjoy, you know, communicating with those in the comment section that have questions or comments. But yeah, just continue to tune in, and we'll grow this community and continue to you know, find these better moves for us, right? Like I said, SOXL has got to get a pullback, and when it does, we're going to be ready and waiting for it, right? Not only to make money to the downside, but for the re-entries back to the upside. So that'll do it for today's video. I've rambled on enough at the end here, so we'll wrap it up like we normally do. If you're watching this Thursday night, we hope you get some good rest tonight, wake up refreshed tomorrow morning. If you're watching this Friday morning or Friday during the day, we hope you got some good rest last night, woke up refreshed this morning, and we look forward to getting out there and trading with you.